Hello, everyone, and welcome to another episode of Flipping Out. This is Paul Lizell, your host, and with me today is another Paul Sparks. And Paul and I are in the same mastermind group. We got to meet, I guess, about 6 months ago, was it, Paul?
Yep, sounds about right.
So I got introduced, I think, through Steve Trang, through Matt Andrews, and these guys in our group. And you were in something different in crypto that I have not gotten involved in. And that was basically doing yield farming, earning cryptos, earning Guardian and a few others. There's a bunch of them out there that you could do this yield farming with and earn great passive income. But before we dive in that, because we're going to get deep into that, why don't you give us your background in real estate, when you got into real estate and cryptos?
Absolutely. So I am a former engineer, recovering engineer. I got out of college and decided I didn't want to be an engineer. So I got into, why is my light freaking out here?
That's right. I can see it pretty good there.
Sorry. My team's upstairs recording some other stuff. So yeah, I was an engineer, got into sales, and I was selling innovation. I was selling automation equipment to manufacturers. So we were selling lasers and cameras and all sorts of equipment to essentially help them automate their production process. This was new tech to this, to these customers. That's sort of where I cut my teeth, was selling this type of tech. Went from there and started selling similar tech, but to a different industry, the airline industry and the logistics industry. So Amazon, United Airlines, these were my clients, and I was traveling 2 cities a week for about 4 years. It was just, it was a lot. But I had a lot of experience learning how to take really complicated technology and sell it to a very large organization so that they could actually make use of it. So naturally, blockchain was something I gravitated towards. But through that process, I started buying some rentals, found my way into real estate purely sort of by luck. It was like, well, I'm making all this, good money traveling, but I need to get my money to start earning money for me. So, here in Denver, I really just bought primary residences and turned that into a rental, and then turned that into a rental, and did that about 4 times, and collected some, Airbnbs. And so eventually I was like, well, I think I could go full time at this and try to build a business around it, which is what I did. And so in 2020, I left and went full time in real estate. And what happened was, buying rentals is much different than running a real estate investing business. And I had really no experience as a business owner. So I took a lot of lumps in my first year. And I say lumps because what the sales looked like were this, right? Very lumpy. And we had cash flow problems, as a lot of business owners do in their first year or two. And so what I found was a way to turn my business into a passive income generating machine. Figured out this process that you're alluding to here called yield farming. And I'm sure we'll go into that a little bit more in depth. But essentially what I was able to do was take the cash that I had sitting in my bank that was just getting eaten away by the rats of inflation. And take that money and use it to generate passive income. And I was able to essentially create enough passive income so that my real estate business runs at about net zero. So whether we do a deal or not doesn't really matter to me, because we've got enough money coming in from this passive income source to cover my overhead. And that was like, wow, this is a crazy opportunity. Like,
that's a game changer for you right there.
It was an absolute game changer. And so from there, I decided to show a bunch of other real estate investors how I was doing this, how they could build what myself and my mentors call a business treasury, essentially creating passive income from the money that you have, retained in your business. And, fast forward about, that was really in March when we started that business. And now we've got it's actually, I checked this morning, over 170 real estate investors, crypto investors who are part of this community, working on, well, not only how do we earn passive income, but a lot of the other applications that I'm sure we'll get to today. So that's really my journey.
And that's an awesome one. And yield farming is something that not a lot of people know about. And I knew a little bit about it because I was in the crypto space, but I didn't jump into it. I did not do that. I was basically buying my favorite cryptos out there and staking them and earning, 8, 9, 10, 12, 16%, some of them up to 35%, depending on which one it was. So this was a whole new concept for me, and this was tremendous because basically what you're end up doing is you're putting your extra cash that you're not utilizing right now into, in essence, what would be like an equivalent of a 1980s savings account where you're earning 8, 9, 10% interest, sometimes more, right? Sometimes a lot more. You guys are earning yield farming here. And then you're taking that income, that passive income, you're utilizing that, right? And you're leaving what's in a treasury there, more or less. Is that what you're doing? Did I get that right?
That's exactly right. And I figured I'd just kind of illustrate this for those. So like I start with what I call a business treasury. And, this is cash. We're putting money in the business treasury in what we call stable coins. You're obviously familiar with this.
Oh, yeah.
But different coins pegged to dollars, right? And obviously folks are a little they're probably aware of some of the other stable coins that aren't quite stable, that have crashed. And so understanding how to evaluate stable coins, that's extremely important. So first of all, you have to know how to do that. But we take this and we use it, like you said, something like 4 to 12%. I mean, we're not trying to hit a home run here. We're trying to protect our principal. The business treasury is made up of dollars, same dollars that are sitting in your bank, just convert it from a paper dollar to a digital dollar, right? And by staking that, we earn an asset. Another way to say this is a coin. And then what we can do is we can stake it again, but this time maybe we take, 20 to 30%. And then you do it again. Stake another coin, and this time maybe it's 40 to 60%. And then maybe that compounds back into your business treasury, right? And so it's this cycle of accumulating assets and different coins. And so, I don't necessarily, a lot of people have this view of crypto like it's gambling.
Yes.
And it can be. The way a lot of people approach it, it can be gambling. Now, there's a lot of upside if you can extend your time preference, right? If you can look over a 5-year time horizon. Most people look at a crypto chart and it looks like this, and they say, I don't want any part of that. And I'm like, well, that's kind of a silly thing to say, right? Because we can benefit from the volatility if you know how to approach the problem correctly. And so instead of me trying to guess which coin is going to be the next thing, is it going to be Bitcoin? Is it going to be ETH? Is it going to be, Guardian? I mean, insert any coin that you might want to get. And what I say is like, I can completely reduce the risk if I can just get those coins for free.
Yep.
So that's what this really is. That's what the strategy I sort of learned how to do is create this business treasury that's your principal is highly stable and highly secure because it all sits in a stable coin.
Yes.
And that stable coin is producing assets, which you can then restake and restake and restake. Some of them are going to go do 100x. Some of them are going to go to 0. I'm aware of the volatility. How we hedge against that is by getting them all for free.
Right. Yeah, you have nothing, you have no risk, right? Nothing to lose right there. You're getting them all for free. Some of them go up. Look, when you started doing this, it was a bull market and you had great upside and you're getting really good gains on it. Now we've obviously flipped towards a down market, right? But you're still up, I'm sure, well overall, just because it's all been free that you've earned. And you're sitting on the stable coin. And just dive a little bit deeper because you made such a great point about stable coins, which ones are good ones to be in. And I was never a fan of the algorithmically based stable coins. I'm sure you weren't either, just because you want to know what's backing. It's got to be something backing it, right? We know with the Binance US dollar, that one's got a lot of assets backing it. We know with Gemini's US dollar in New York being the most regulated state in the union, pretty much when it comes to financial, that one's going to be pretty well done. Coinbases. So you have those which are very stable. And then you have ones with Tether, and some assets are backing it, but we don't know how much. And I'm really nervous about Tether, and you have to use it because it's an Ethereum backed one, depending on which exchange you're wanting to be on and which crypto you want to get into. But this is part of what you spoke about and why people call it gambling is because it is risky, right? I mean, even the stable coins are risky. There's no FDIC insurance on these coins. So they could drop just like the algorithmically based one did. But there's much less risk when you have other assets backing it. And a lot of them had a lot of Bitcoin backing it. And Bitcoin is probably the most stable of all cryptos because it's the original, even though it's still very unstable. But getting into that, the USDT, which is Tether, right, is one I was a little bit nervous about. I'm only in and out of that one. I don't mind holding Coinbases. I don't mind holding Binances. I don't mind holding Geminis. And you're probably utilizing more of those when you're doing this yield farming.
Well, it's, so when I talk about 4 to 12%, some people are like, well, why wouldn't you just go for the 12%? It's like, because there's inherently more risk, right? So it's not about saying there's no risk. It's about what I call domesticating risk as much as possible. We want to reduce the amount of risk as much as possible while still having a tolerable upside, right? We want to create a scenario where the downside is very low and the upside is still very high. And so USDT, like you said, is not my favorite. I don't go for those higher yielding stablecoin farms because there's inherently more risk and there's not enough upside there. Like the difference between, let's call it 5 and 10%. It's like, well, I don't need to, like, that extra 5% is made up by just having one of the coins that you accumulate do a 10x, right? Which it's so funny to say that in crypto. Like, we've gotten so desensitized to a 10x.
We have.
And it's like, but no, this happens all the time. This has happened to me so many times. I'm not even talking about just a 10x. Guard did over a 100x from the time that I started accumulating it, right? So I don't look at my principal as needing to create this. That's not where I create the upside. That is about reliability and reducing and domesticating risk as much as possible.
Yeah. Yeah, you can be much more risky with what you've earned in essence for free, right? Your interest. And so if you think about it, back in the day when there was no cryptos, you had money in a savings account, you earn 8% on it. You take that 8%, you didn't need that income. Oh, you know what? Let me invest this in a stock, right? People were doing the same things in the 1980s. And that's risky, right? Because that stock could really drop, could go up, could go bankrupt. Same thing as these cryptos. Really, cryptos get a bad knock for being looked at as gambling more. I mean, obviously it's unregulated, right? So you're going to have much more volatility. You and I have talked about this. I personally love that it's unregulated because I like the big upside and I know the big downside is there. But if I just hold these good tokens, what I believe to be good tokens, I should be good over my 5 to 7 year period. And that's kind of how I look at it on the time horizon there. And I know you're big on Guard. You want to talk a little bit about Guard so people know what that is?
Yeah, sure. And actually, before I move on to the specific Guard, I wanted to tell a quick story about flipping versus rentals. And so what you're alluding to is this massive upside where there's also massive downside. Well, if you explain this to a real estate investor, you'd say, well, here's how you're approaching crypto. You're going out and not you, I'm saying the majority, 95% of people out there, this is what they're doing. They're going out and they're buying a house. Let's say if we traded cryptos the same way we traded houses, this is how it would be. You're going out and you're buying a house. You're doing no repairs to it. You're not getting any debt on it. And you're not putting any tenants in it. You're just buying it and holding it for 2 years, 5 years, hoping that it goes up in value.
Yeah.
That's how people are trading crypto right now. And for most real estate investors, they're like, yeah, that's why I want nothing to do with it, because that doesn't make any sense to me. Now, we know that this market is going to move up and to the right over time. So like for example, you have a very long time preference and a macro belief in the crypto market. So you're totally fine just sitting on these cryptos and holding it. But what I'm trying to advocate to people is like, take the rental strategy. That is what DeFi is. That's what real farming is. So instead of just holding that house, stick a renter in it, generate cash flow. You still own that house. The tenant doesn't own the house. You're just lending your house out so people can rent it and you earn cash flow while that happens. Now, what happens if the house goes up in value in 5 years? You still benefit. Right? You still get that appreciation. it's just a matter of like, most people just don't understand how to use decentralized finance. They don't know what it is because it's so new. It just started like in 2019. It's no surprise. So that's really the strategy that I take here, is not necessarily to just buy low and sell high.
Passive income you're looking for. You're looking for
buy it, hold it, create that income, that passive income, and I'm going to benefit from the appreciation over time.
And then what you reduce using that method too, where I have more of with what I'm doing is staking particular cryptos, is impermanent loss. You and I've talked about that before. So Theta, for example, it shot up to $16 and I was staking it. I was buying it at under $1. I was buying it at $3, $4, and now it sits at about $1. I've been staking it, earning 9%, which is great, but it's not making up for that loss in value that it has during that time period, right? So I guess you could look at that as a permanent loss. Again, I'm not selling it, I'm keeping it. So I'll wait till it goes back up so I won't experience that impermanent loss. I'll wait till it goes back up. Of course, there's always risk it doesn't go all the way back up, but that's part of playing this game. What you're talking about is creating more of a passive income, like a rental income, and you don't have any of that. You really have very low risk in comparison to being in these individual ones like I'm in, more or less.
Well, and so USDC BUSD is not really subject to impermanent loss.
Right, not at all. Yep. They don't have any of those issues with that, which is great. And for people who are looking to get in, people have extra money, this is a great way if you want to get into cryptos and really not have to worry about losing a whole lot because let's just say you're real conservative. Utilize this yield farming method, make some interest, take that extra money and gamble with that. Use those all those extra assets that you got for nothing and use that and try to buy something, pick something, figure out what you're going to do. That's probably the safest, best way for most conservative investors to get into and do it. I like it a lot. Well, I'm planning on incorporating a lot.
It's just because the real estate crowd, most of them aren't, gamblers, right? They're not, they don't see the world that way. And they probably don't have a macro belief in crypto yet. Right. So for you to tell them like, hey, go buy Guard or go buy Bitcoin or ETH or whatever, they're like, I'd rather just buy cash flowing real estate. Mm-hmm. Well, this is a strategy to get more cash flowing real estate. Like that asset circle I just drew there is a way to get more real estate. You know what I mean? And change coin out with more real estate. So it's just about kind of manufacturing your machine. Now you asked me, why do I like Guard?
Yeah.
Well, a couple of reasons. First of all, Guard has a fixed supply. So a lot of the times you see these coins, and as you know, they have, the tokenomics, like they can just print more and more and more. Mm-hmm. Which I don't like because you're going to get the same situation as we have right now with the US dollar, for God's sake.
Unlimited printing. Mm-hmm.
Just unlimited printing. So the smart contract, first of all, has a limited supply. Secondly, it's used as what we call a business treasury. So it's designed to function in these decentralized exchange systems to be able to create stable cash flow. So we're pairing our Guard with the US dollar. And because of the stability of these two coins specifically, because first of all, it has a limited supply, and the specific holders that hold Guard are using it as a business treasury. There's probably a lot of things I could go into about why I like this coin, but really those are the two main reasons. One is because I have a really strong relationship with, he's actually a partner with me in the Whale Club, the guy who created the coin in the first place. Mm-hmm. And I know the people who are using it, right, as this business treasury. So that's what I use as a business treasury because it can produce stable cash flow over time, much higher than 4 to 12%. Now, of course, when you look at the chart of Guard, really of any crypto that made it through this last decline, mm-hmm. They all look pretty similar, right? They all went up and then they came back down. And so, first of all, there's this like gross misconception that everybody in the crypto, everyone's trying to compare crypto charts with something else that they've seen in the past, mm-hmm. right? Like, but look at all these charts in stocks. Look at all these companies. They don't look like that. Well, this must be a bad investment. And my first thought is like, we're not comparing the same thing here. Okay. The crypto market has 20,000 coins in it right now.
Mhm.
You add the market caps of all those coins together, we're less than $1 trillion, as you know.
Yeah.
It's not fair to compare an asset like that. Okay, so when we've talked, I think maybe you were on the call last time we talked about that, but for scale, for people to understand, like the singular asset of gold, right? Gold has a $10 trillion market cap.
Mhm.
BlackRock, largest hedge fund, fund manager in the world, one of the largest. They manage about $10 trillion as well. That's one singular asset and one singular entity that has 10 times the market cap of what crypto has right now. So we're comparing a baby with a grown adult, right? And so I say this all the time. It's like, well, what do babies do? They scream, they cry. They're also extremely happy. Like, it's volatile. Their emotions are all over the place.
Yep.
So I'm like, why we're not comparing the same things here?
No, we're not. And if you want to get about as close comparison as you're going to get is the old tech stocks from the late 90s, early 2000s. You go look at what Amazon even did from the late 90s to what it is right now. If you invest in, and that's not tech stock, obviously, right? But look at what Google did. You look at what a lot of these tech stocks did, and very volatile, just like cryptos. Now, cryptos are even more volatile. And in large part, like you just explained it, there's not as much money in there. So let's say regulations come in. Let's say BlackRock gets in there and does even more than they're doing right now in crypto space, because they're only doing a little bit right now. And let's say they put 10% or 5% of what they have in there. That one company alone is adding 50% to the market, right? Let alone if they did $1 trillion, if they did 10%, then you are literally doubling the crypto market overnight. Just think what that does. And that other companies come in here, because we had Michael Saylor come in here in about around August of 2020. And that's what really started to push Bitcoin up, because he started to buy it like crazy. MicroStrategy, right? And then other ones followed suit, and Tesla and others. And as soon as one of them pulls the rug out, like Tesla did, poof, next thing you know, the market tanks again. So it's very volatile. You just got to be able to deal with that volatility. But as soon as regulations come in, it will decrease the volatility. You'll stabilize it more. You'll still have great upside in the beginning, but you'll end up having later on down the road less downside. So we're getting there. And again, I'm not a huge fan, because I'm just not a huge fan of government intervention, but it's a necessary evil in this space, and it's coming, and it's probably coming in the next year or so, I would imagine.
Right. And so, so regulation, safety, fiduciaries, I'm going to come right back to that. But, when we talk about these coins, Guard went from, I got in around 10, 12 cents. It went to $18. Now it's back to $1. So it's funny, because everyone's like, oh, like that's a pump and dump. And I'm like, it literally was at 10 cents at the beginning of the year. And 10 months later, it's at $1. It's done a 10x.
Yeah.
Show me any sort of, how can you say that that's bad in any sort of light? Only when compared to that outlier that went way up there, right? Are you able to say something like that? And so my point is, volatility is useful. Yes. We can benefit from that if we can manipulate it and use it to our advantage. You talked about regulation and the idea that if BlackRock was to expose even 5% of their investable assets into crypto, that would completely shift the market, the crypto market, by 50%. Yeah. One company, right? And the role of safety for companies like that. And, we talked about this on a previous call, you and I, around, the fiduciary responsibilities of a company like, say, Apple or Microsoft, right? Who manages hundreds of billions of dollars in their investable assets, their business treasury, right? Well, for a company like that, because right now there's not a lot of regulation around crypto, and the government is eyeballing it like crazy. And, we're saying things like, well, we don't want it to be regulated because we know how to take advantage of this massive volatility. But with that being said, there is an upside for for regulation, because what that does is it provides safety for the marketplace. And if you are the CFO of one of these large entities, your fiduciary responsibility to your company and to your shareholders without any safety and regulation is to stay out of crypto. You're not going to expose your balance sheet to this massively volatile asset, because they're definitely not going in and yield farming, right? All that BlackRock is doing, working with Coinbase, is making it so institutional investors can buy Bitcoin. That's it, right? There's nothing novel about it other than the fact that they're allowing institutional investors to bring money in. So again, regulation brings safety, which completely changes the fiduciary responsibilities of these large organizations, right? If there is safety and there is regulation, the fiduciary now becomes a responsibility to get exposure to this. And even if one organization exposes 5% of their 5%, we're not talking about much here, the crypto market is going to boom. So to me, it's like, and actually I'd be interested in getting your opinion on infrastructure bets, because actually this last weekend I just ran into a guy who is running and managing a fund where they're placing, DeFi infrastructure bets basically. And so what I mean by that is like, and obviously you know that, but for those who are listening, if you generally think that the crypto market is going to go from 1 trillion and it's going to increase. Now, I think personally, there's no way it doesn't surpass the market cap of gold.
Yes.
How long is that going to take? I don't know. But in order for that to take place, there has to be an underlying infrastructure there. Right? So what's your thoughts on that? And what's your thoughts on how do we position ourselves? So it's like, the internet in the late 90s, like in order to have the internet, you have to have service providers, you have to have internet providers, you have to have developers, you have to have programming languages, all these different things that support that. That's what I mean by the infrastructure. Yeah. What's your opinion on that?
Oh, that you are hitting a nail on the head with that, Paul. And one of the cryptos out there, one of the plays that's bridging that old financial system, right? The COMEX and everything, because COMEX is huge, obviously, with precious metals and other commodities, to the new financial system, the crypto through blockchain, is persistence. I think that's what I've talked to you a little bit about. And they are building that infrastructure right now for that. They also have liquid staking that they do for different companies out there, and they're part of the Cosmos blockchain, which is a pretty darn big blockchain in and of itself. But setting up that infrastructure, and that's what's being done right now, and a lot of people don't realize this. Ethereum has obviously been a player in DeFi space. Aave is humongous in the DeFi space. There's a lot of companies that are out there in that DeFi space that are building the infrastructure now, so that when banks, institutions, Bank of America is planning on this, Fidelity already as well, Wells, I'm sure, Wells Fargo and Chase are, I'm sure, doing it in the back. I know Chase is doing it big time right now. They're having it set up so they can custody cryptos for people as well. And that's part of the infrastructure in a way too, because one of the biggest things we have, one of the biggest problems we have is for people older than us, like my parents, my grandparents, them custodying cryptos, they're not comfortable with it because they got to have their seed words, they got to have their passwords, you got to store them in multiple locations, right? Can't have anything online that's not secure. You don't want to put it in Dropbox or any of that kind of stuff, because then somebody can hack in and get that. So once you have that set up, that bridge right there, that's going to be a bridge to the DeFi space as well. It's going to really, the DeFi space is going to be massive. People don't understand it. People are down on it right now because of things like Celsius and BlockFi. Celsius had bankruptcy with Bancor, BlockFi, and all these different companies have had issues. So people are a little bit shy of it right now, which is why I'm going a little heavier into the DeFi space personally right now on a dollar cost average, because they're building the infrastructure right now on the backside to set it up for when we do shift. And it's going to make it, it's not going to be seamless, right? But it's going to make it a little bit easier for people to get in there. There's still going to be issues for people to invest for non-layman, right? But your average Joe, it's gonna be a lot easier. If they can go to Bank of America, put in their PIN card and buy some Bitcoin, right? It's just gonna be simpler.
I'm just making a note here of like, so, I mean, in order for any of this to happen, like and I'd like to touch on after we kind of get off this subject, like the actual utility of blockchain in the real estate space, because
oh yeah, we're gonna get into that.
we're talking about currency, which is just one of like a lot of applications here. I'm not necessarily referring specifically to trading meme coins. Like, that's not really what I'm saying here. In order for, but let's stay on that vein for a second. In order for DeFi and crypto to be around and for people to buy and sell and trade crypto, you need networks, you need exchanges, you need oracles, you need insurance, you need NFTs. I mean, and I'm leaving out a ton of other just technical words because it'll just confuse people. But the point is like, we have to have these things in order for crypto to grow. So part of my strategy is accumulating these different areas and different coins in these different areas. As I'm earning these assets, I'm just accumulating more of the things that I know have to be a part of crypto if we're going to grow. If this market is going to go from 1 trillion to 10 trillion, we're going to need these different functions. So I'm just accumulating coins in those areas that I really like.
Oh, that's a great point, Paul. And just to shed a little light on what you're talking about. So you look at Ethereum, which is a layer 1 blockchain, right? That's your basic layer 1 blockchain. There's gonna be a lot of transaction things done on the Ethereum blockchain for a long time. Then you get an oracle like Chainlink, right? They're essential. This is how communication goes on within that blockchain through these oracles. And Link isn't the only one. Link is just the biggest one out there that does this. And then you get layer 2s like Matic, Polygon, right? You get these other different layers. You have all these multiple layers. And that's what you're talking about, Paul, when you're getting into this different things, different assets to buy, because each of these cryptos has a different job and they must work together in order for it to fully work, right? You have multiple layers within this crypto. So you hit the nail on the head with that. That's super smart. You want to be buying these different ones and the ones you believe in. You know, ETH is a layer 1, Cardano is a layer 1, Polkadot's a layer 1. You've got Avalanche, and I'm missing a few others too. Algorand. There's multiple ones out there. And it's not a bad idea if you're looking at like in stocks, when you get a basket, when you're trying to diversify your portfolio, maybe buy a little bit of each of these. One of them hits, the other ones don't go as much. You're just offsetting your risk a little bit there. So it's good to be in multiples of those.
I like Elrond. I like Phantom. I like Kusama.
Yes.
These are just some that I'm a big fan of personally.
Kusama is huge. It's great.
But I don't need to be right very often with this strategy. That's kind of the point. It's like, if you can design a system where you can be wrong 9 times out of 10,
it'd still be all right.
But when you hit that one, you still hit 100x.
Yeah.
It's like, that's literally what we're trying to rig the game. We know it's volatile. We know some of these aren't going to be around. People say that all the time as if it's like some revelation. Half of these cryptos, half of these altcoins aren't going to be around in 2 years. And like, yeah, welcome to the party. Like, where have you been? We've been here for years, you know? It's like, I know that. We're just trying to place bets. And that's actually what this guy who's running this fund, he was doing the same thing. And I'm like, oh man, I'm thinking about it right. If this guy's managing this, you know, $10 million fund and he's doing the same thing, I'm like, because the theory is like, it can't be around. It can't exist without these functions. So how do we just place these bets, you know, all around? So anyways, I love it.
Oh, that's great. That's huge, just being in all these different things. And like, you know, look at XRP and XLM. A lot of people don't know that they, in essence, do the same function. They're kind of competitors. XRP is just the biggest one. And a lot of people don't realize that they are already working with MasterCard for transactions. That's huge. They are going to replace all these credit card systems, and it's going to be much more functional and better. And XRP is weirdly, oddly, not even a blockchain, which is crazy, right? And XLM is another good one, Stellar Lumens. Those two go together. As soon as that SEC lawsuit is settled, I expect to get a bump in XRP pretty quick, and XLM will follow it a little bit, but we'll see. We'll see what goes on there. So now let's go into our next venture. And this is one that you and I are extremely passionate about. And it is the mixing of real estate and cryptos. Can you hear me?
I can hear you, but your video is frozen on my end.
Hang on one second. I'm going to pause it and I'm going to change my battery and then we'll be good to go.
Cool.
All right. Before my video cut out there, we were getting into real estate and crypto space, blockchain technology, really mainly joining together. And you and I are big into this because we're big real estate investors. We love cryptos. There aren't enough real estate investors who are in and understanding cryptos yet. So we're kind of educating these guys on what's going on. And there's multiple companies out there starting to do stuff, and there's going to be a bunch that come and go. Lofty, LOFTY.AI is one of them. They've kind of already started it, and it's a great concept. My son, who's just turned 18, can now go spend as little as $50 and own a part of a rental property, which is fantastic, right? You can get voting interest in these rentals if you have enough. The more you buy, obviously, into a particular rental, the more voting rights you have. And if you want to own in multiple markets, you could just disperse it all around and you get all the tax benefit. It's tremendous, right? So this is where the future's going. This is where you and I are very excited about where it's going. You want to talk a little bit about that? Yeah, I know you got a lot more to add than I just did there.
So what we call this is real estate tokenization. And the way that I just try to describe this, so it's extremely simple. It's like, imagine if you could buy stocks, if you could buy shares in a real estate project or tokens in a real estate project, the same way that we buy shares or stocks in a company, right? It's totally transferable. You know, crowdfunding is already a thing. Like, this already exists.
It does.
All that we're trying to do is to tap into the $1 trillion market in the crypto world, because these people have a problem. They're not real estate investors. They don't want to deal with toilets. They don't want to deal with tenants. They don't want to deal with any of the rehab and construction. I mean, before we got started the video, we were just kind of swapping some war stories about, you know, what it's like to just deal with all these things, right? And this is like how we make our living. But these crypto folks, and I'm going to speak directly to the ones, because I know guys who have made like dozens of millions of dollars in the last year or two, trading, doing the things that, you know, DeFi, all these yield farming things. They have absolutely no idea how to get their money into crypto. And so here was the conversation, you know, for example, my buddy Tom, I'm like, Tom, let's take some money out of crypto and like, let's just go buy some real estate together. You can fund it and I'll do it and I'll get you the cash flow, a lot of yada, yada. And they're like, I don't really want to like take my money out of crypto, send it back to Binance, wire it to my bank account, then send it to your bank account. And then we invest and then it turns into cash flow, which has to come back to my bank account and then your bank account and then back into Binance. It's like, yeah, that's too many steps. I don't want anything to do with that.
Right.
So literally all we're trying to do is shorten the gap between, yes, I want to buy real estate, and then like, okay, here's the button that you press to buy real estate. Imagine that. And you get issued tokens or coins, right? That are just pegged to the asset. And in this case, we're referring more to like a portfolio of houses, right? You know, more like a fund or a syndication and less on like the single family house down the street. We're not really tokenizing that. We're tokenizing larger portfolios so that the folks in the crypto world can have a much easier on-ramp into real estate investing. And the analogy I give is like, it's the Microsoft Excel, Google Sheets example.
Yeah.
You know, Microsoft Excel was a powerhouse for 20 years, like the number one name in the space. And then what did Google came in and they were like, we're not going to change anything. We're going to leave the format exactly the same. In fact, we're probably just going to copy almost identical, the colors and the logo and everything. It's going to look exactly the same, but it has one key difference. It's on the internet.
Yeah.
And you don't have to download the Excel file anymore and rename it and send it back. And then you download it and rename it. Oh, this was on this date. I made this change.
Right.
It's a pain in the butt, right?
Yep.
That's the only thing that they did when they created that product. That's all we're trying to do here is take the crowdfunding models like GoFundMe or Fundrise and make one small tweak. It's just on blockchain. That's it. You can buy and sell these assets now with crypto instead of having to convert it back to dollars. That's what we're working on.
Yeah, and that's huge because that'll save you money in essence. Because when you go back and forth and swapping in and out of these cryptos, it costs you money, gas fees, and you have additional fees and costs that you have there. You're going to still have it when you go from Bitcoin to this particular property. And these properties are basically, or the portfolios are turned into NFTs, non-fungible tokens, totally separate based on a certain amount of coins, right? And they're only going to issue a certain amount of coins based off the value, I'm guessing, of the portfolio at the given time. And potentially, as the asset grows, well, obviously your value is going to grow, but they could potentially issue more coins. I don't know how they're going to fully do that or not do that, but that's where it gets really interesting with what goes on there, right? With appreciation.
That's the fun stuff. That's the fun stuff. And what I was telling you a little bit about my background. I came from technology for 10 years. That's what I did is try to sell this stuff. So I've just found like I'm in my element right now, trying to figure all this stuff out, being confused 90% of the day.
Yeah.
For that one realization, like, oh, okay, I get it. Then it's like, okay, how do we communicate this back to the real estate world? Because I think the big gap, Paul, why we haven't seen the adoption into the early majority. We talk about the diffusion curve, right? You got the innovators who understand the tech so well that all they can speak is features of the tech. Then you have the early adopters who are looking at them and they're like, oh, wow, I get how this is useful.
That's us right now. We're the early adopters.
That's us right now. And so, but the early majority, they're not going to do it until there's safety, until someone can explain it in terms that they can actually understand. We've got to connect this stuff to real world utility. It's like, that's cool, but how does that benefit me? That's the question that they're asking. And so what we're trying to show the real estate world is like, you're missing out on $1 trillion market that's likely to run up to 10 trillion. And you can capture capital from that market because these people are desperate to have something to downshift in, because most of the coins that they're buying, they run 100x. The only downshift they have is into like Bitcoin or ETH, right? They don't have a downshift. Real estate is what has created more millionaires and more wealth in this country than any other asset. That's all we're trying to do, is just help real estate investors sell real estate to crypto people and help crypto people buy real estate without all the steps involved.
Yeah, and your average Joe who wants to learn about real estate and get involved in real estate, but doesn't necessarily want to put all that time in, but wants to get some of the benefits of owning it, now can do that very, very easily, where they couldn't do it as easily before without buying into some Wall Street fund, right? And doing so where they have no voting rights, no nothing. They just are earning passive income based off of that, or hoping that particular stock goes up. So it makes the market to the direct consumer much quicker too, much easier from us as a real estate investor. If we're sick and tired of dealing with all these mortgage companies out there that are relying on buyers in the secondary market, now we can kind of circumvent that, potentially turn this property we want to fund, throw it in there as an NFT and let people fund it and either get a percentage return, get an interest rate, whatever that is. It allows so many different things. And that's one thing that I'm looking forward to, being able to fund potential rentals or my fix and flips, through the tokenization of real estate here. So I'm really looking forward to that. It's big time.
Yeah, it's one of these, like, we're not there yet. I mean, we are technically, we're there yet, but like, just because you can technically do something doesn't necessarily mean it's economical, doesn't necessarily mean that you're going to get, we don't even have the secondary market yet to be able to trade these tokens outside of that. So there's still a lot of barriers and obstacles to overcome. However, it's by far, in my mind, the lowest hanging fruit in terms of opportunity for asset managers, like most of us real estate investors are. I mean, we know a lot of those, right?
Right.
To be able to tap into a new market source and sell real estate to the crypto crowd. And you're providing a massive service to the crypto people because they want to buy real estate. They just don't know how.
Yeah. Yeah. And you could do things to tie people in there to be able to get some of that and share in that depreciation and share in some of the tax write-offs, the mortgage interest, the cost of renovations and stuff. There's ways to do that and tokenize it so people can get that. That's where it gets a little more difficult potentially, but I'm guessing it'll be some kind of percentage based as to how much of token that you own of each particular crypto or NFT. That really is just an NFT. For those that don't know what an NFT is, it's a non-fungible token, and it's been used really in the beginnings as digital artwork. And now it's being utilized for a lot more things. I think it's only a matter of time before, and probably in the next few years, before these phones will become NFTs and sold as NFTs, and even vehicles and other things. I mean, everything's gonna be on a blockchain. Everybody's gonna know who owns what. It's kind of a loss of privacy in a way, but as long as it's more decentralized, I'm a big fan of that. And as long as you avoid and reduce, if you could do this, to think about this, one of the greatest use cases of blockchain technology will never happen because they can't corrupt it. Voting. You can make voting so pure, so clean, so easy if you utilize the blockchain. And that's why, unfortunately, it won't ever get used, because these guys, politicians, want to stay in power, and they'll do that by any means necessary. And voter fraud is a big one, obviously, right? But real estate, it's going to be, if you think about that going into title, because we talked about title a little while ago, as soon as the counties can get in, it's going to take a while, right? This is why this is probably like a 10, maybe a 15-year process for these smaller counties. You create a blockchain and you're recording all these deeds and mortgages on the blockchain. It's really easy to decipher, know who owns it. It's much harder to commit mortgage fraud, right? And steal people's deeds. It's just going to it's going to make everything much more secure than it currently is, and easier to track and less cost. It's probably going to put title companies out of business. They don't want to hear that, but it's probably going to put them out of business in the long term. So.
You better adapt or you're going to die. I agree with you. It is a longer term application, because there's just it's so fractured and decentralized and difficult to get buy-in from this rural town in Missouri, right? Like, that's who we need to go on blockchain for this to really all make sense.
Yes.
I mean, if there's any indication on how slow the real estate market adapts to new technology, just look how they handled the internet, right?
Right.
I mean, it took them significantly longer than most industries to actually adapt and transition over to that. So I don't think it's going to be any different. I think it's going to take a while, like you said, probably a 10-year application, although it's an extremely good application of blockchain, just because it's, we talk in the Whale Club about the difference between validity and usefulness.
Mm-hmm.
So totally valid application. But how is that actually useful to us in the short term? It's not even relevant. I don't bring it up anymore. People want to talk about, title and ownership transfer. And I'm like, yeah, it's a totally valid application, but it's like the voting rights. It's like, but it's not relevant because it's never going to happen.
Right.
Just think about it. And maybe in 5 years we'll see, but like not anytime in the short term.
Yeah. I mean, even think about these tax offices, and I've owned some properties in small towns. When I want to get a copy of my final bill, or if I need to send them information, they're asking me to fax it. It's usually an 86-year-old guy, he's retired. That's what he's doing. He was voted in and do this. He's the tax collector. I'm like, dude, fax. I don't have a fax machine anymore. I don't want one. I don't want to sign up for eFax and pay $20 to send you this fax. I'm going to scan it and I'm going to email it, because I hope at this point you are on email, right? And it's much cleaner and better than a fax anyway. It's bringing that, and that's why you have this big wide gap of time that it takes for adoption, right? To this, think about how long the internet took to be adopted, because I remember utilizing Prodigy and AOL in 1991, 92. When I was just getting into college, and it really didn't fully adopt until the early 2000s. You had a 10-year window there of adoption with that. And that's one that should adopt much quicker and much easier than cryptos. And that's why crypto is taking a little bit longer. And it's amazing when you think about what Bitcoin has turned into. Bitcoin was created, and all this other stuff is coming out of it. We're talking about tokenizing real estate, right? All because Bitcoin was created and Satoshi Nakamoto's white paper. So it's pretty impressive. And that's why when you think about forward thinking in the future, there's so many applications. You and I could spend 10, 12 hours nonstop talking about all the things that you could utilize cryptos and blockchain technology for, right? So many different things, but that with that, you're going to have so many different, we say 20,000 plus cryptos out there. 80% will probably be gone over the next decade. Would be my guess, about 80%.
Point in talking about stuff that's so far down the road, because is it Moore's law? Every 2 years, like technology, I forget exactly how it's said, but point is, it's like, I don't even pretend to have any clue what it's going to look like 2 years from now. If it's not something that can be done in the next 2 years, it's not relevant. I don't even want to, like, yeah, that's cool. And that is a potential application, but like, as more data is presented, as more information comes to light, it could turn out that that's completely irrelevant.
Totally.
Or it's just like, I don't spend my wheels talking about things that are that far out in this blockchain world, because it's just a recipe to.
It's just waste of time. It's just a waste of time because, like you said, a lot of it won't be relevant, right? I mean, it's just unbelievable. You think about, just to go off on another quick little short subject, medical records, right? That could probably be the best use case besides voting for blockchain, because you could really reduce medical errors when a doctor could go in and see your whole personal blockchain, right, of your whole life, every allergy you had to every medication. You give them a quick little glimpse, look in, they go, all right, I can't give this kid penicillin. I can't give him this. I can, oh, he had this adverse reaction to that. It can reduce so many errors in medical errors. It would be tremendous for that. Plus, you have all these doctors that have to contact. You think about the waste of time, and a good buddy of mine's a doctor. We talk about this a bit in blockchain use. One medical office to contact another one to try to get information and wait for that doctor to pull the file, bring it to them, right? Where in the meantime, you could just go into blockchain, look at it. Oh, he had an X-ray on this. We saw his knee. He had tore his whatever, you know? It just can make things so simple. I think VeChain's one of them out there that started to work on the medical side. So that's a big use case that I think you'll see. It's just going to take a long time, but real estate tokenization is not going to take long. Like I said, it's already started and it's going to continue and it's going to grow. And I'm really curious to see what this turns into, because it has me so excited.
Me too. Well, I wrote down a quick story about just like the medical, just in general applications.
Mhm.
And Steve and I the other week were talking about how we accessed information before the internet. It's like, you wanted to learn about something, you went to the library,
Totally.
pulled an encyclopedia, you physically went and found the information. And that access and that verification of that information, that's the same paradigm shift we're talking about with blockchain. And all these applications that we're layering on, it comes with the basic fundamental understanding of like, what does blockchain do? It just takes all the information, like medical records is the perfect example. Does anybody who's listening to this, you have access to your medical records? Probably not, right? It's scattered across all the different doctors and states that you've lived in.
Mhm.
And it's probably like not even kept anymore. It was probably put in some database and then they flipped over to a different database and it didn't transfer over. And it's like, that data is just completely scattered all over the place. What blockchain does is it brings it into a single source. It puts all of it in one place, and it's private or public, right?
Mhm.
Depends on the
Right.
type of blockchain. The point is that's what the blockchain does. And that technology is going to enable us to buy and sell real estate better, right? In the same way that the internet just created all of these applications like social media and search engines and e-commerce and all this stuff. It's like, if you told me back in 2000, like, hey, the internet's going to allow you in 20 years, 22 years to be able to like literally order anything you want and have it to your house in like hours.
Yep.
And that's called Amazon.
Mhm.
It's like, whoa, that's crazy. So I don't pretend to know all the applications that are coming from it. But like you said, real estate tokenization is just such an obvious low-hanging fruit.
Yeah.
The technology of blockchain just allows us to account for that information much better, because it's all in one place as opposed to scattered all around in different pieces of paper. This paper says this and this paper says that. It's like, no, it's all digital and it goes in one place. That technology is what allows us to actually do these real life applications.
Totally. And then you'll be holding them in your cold storage wallet. Your rental properties will be in your Trezor, or your ledger. It's just amazing to think what it could turn into and where this goes. But the security that adds is obviously tremendous too, but also your wallet is where your medical records could end up being kept in your personal blockchain. I don't know how they're going to do that, but it's going to be pretty interesting. And I'm so looking forward to the just the real estate side of it, just how it's grown in the past year, the tokenization of real estate, and how you see properties, occasionally on OpenSea and some other NFT exchanges. You're just going to see more and more and more of this going on. And think about the next bull market. Once we turn from this crypto winter to a raging bull market, you're going to see so much more innovation and creativity come out, and so many more things. And I've talked to so many people at the Bitcoin conference about real estate, and there are a few of these tech guys that are really starting to put together the real estate and the tokenization of it here, and they've been working on it. And obviously, it's just going to be a little bit slower to adopt right now because crypto people are harder to adopt. Man, I've had a tough time talking to real estate people about cryptos and crypto people about real estate. It goes back and forth, right? You bang your head in the same walls, right? When you're trying to do this. But the ones who get it, when they get it, man, the light goes on, they're excited, and we're all working on projects together, right? Behind the doors, working on white papers. So it's super
how to play real life Monopoly.
Yes. Yep. No, absolutely.
These little cards and these little toy houses that represent the properties that you own. And it's like, well, you got this NFT and you got this token that represent the properties that you own. And if you can turn it in, and you got to gamify it for the crypto people.
Yes, you do.
So if we can figure out how to educate them on like why wealthy people own real estate, like why I got into real estate in the first place is because it's such a massive wealth driver. We can help them understand that and then gamify it. We're going to turn this into real life Monopoly.
Oh, absolutely. And it'll give you flexibility. Think about real estate from this perspective. If you need to liquidate something and because you need cash, right? So you're going to sell your property, you're going to try to sell it in the next 30 days, 90 days, whatever, turn it around for cash. Well, let's say you decide, you know what? I only need $10,000. Why don't I just sell a fraction of my NFT, right? Tokens, a few of the tokens, and you still own the majority of it still, but you got some cash in the meantime. So it's going to offer flexibility for us as real estate investors to not necessarily liquidate an asset we don't want to liquidate fully. We can still be majority owner or still have a decent amount of ownership and still get some cash in hand too, which that excites me as well. So I'm looking forward to that part too.
Yeah, it's really cool.
So what are you really looking forward to in the crypto / real estate space? Is there anything that we haven't talked about that you're excited about for that? We hit a lot. We hit a lot in this. So
I mean, the four biggest opportunities I see right now is for real estate investors to start earning passive income in the same way we do on our rental properties. Mm-hmm. Except it's significantly easier in less time. You're not dealing with tenants, you're not dealing with any of that. So if you want to learn crypto, learn how to earn it passively. That's the first thing I would say. Biggest opportunity right now. And I was literally able to create a treasury that pays all my business operating expenses. So it's not like some small amount of money that we're earning here. Secondly is the real estate tokenization. And that's a whole can of worms that we've obviously just been talking about for the last 20 minutes or so. We've alluded to the idea of number 3, which is education. Mm-hmm. Education products, where you have to educate this new market on why real estate, and they're not going to bigger pockets,
right?
To get the information, right? They don't. That's not how they're wired. They're not wired to do that. So fortunately, I've got a partner with me who's got a very large reach into that world. So we're trying to teach them in terms they can understand and from people who they already have trust in. Again, Pace Morby, Brandon Turner, like any of these guys, that's not their audience. They're not speaking to these crypto people. So there's a massive opportunity to provide the same level of education that we got in a different way, but to this new market, it has to be curated and it has to be adjusted for the type of clients that we're talking to here.
Yeah, there's no doubt. And, when it'll really hit them is during a bull market when they start selling their cryptos and then they got this huge tax bill.
Bingo.
Now they're going to go, how do I reduce this tax bill? And that's where we come in with real estate, because there is no better tax savings haven than real estate. Real estate offers you all the best tax benefits that no other asset class does. Gold doesn't do it, silver, stocks don't do it, crypto doesn't do it. Chance, though, through crypto, through buying land in the metaverse, right? NFTs, that you could end up getting some benefits if the government decides they want to give you that, right? Doubtful, but there's always that possibility that you can get some of it that way. But we can create products that do offer it when we tokenize the real estate and give them benefits of depreciation, give them benefits of tax, of write-offs for the taxes, for the insurance, for maintenance, for all these different things. So there's a way to share in that. And that has me pretty excited for the future, and educating the people in the crypto space about that for sure. I think you're pretty much into that as well.
With stories, it's like, well, this guy made $40 million last year. He would have paid X amount in taxes, but because he bought real estate, he was able to acquire cash flowing assets, and so the tokenization is one thing. I'm working with these guys to just get private money, right? Just lend me capital.
Yep.
We've built this relationship with them. Now they trust us, and we've got, it's like 65 or so, just shy of 70 real estate investors in this group. You and I were talking about on this call, like, we got to raise some more private money. It's like, we are building an entire community of people who want exposure to real estate and don't have it.
Yep.
We're tapping a completely green field here. So again, it all starts with education, and it starts now, right? I cannot wait for the, I told you so's. I'm holding them back hard this time, Paul, because I'm gonna be like, I told you needed to learn about real estate before it rips. Because if you don't know your plan to take chips off the table, and what we have to get these crypto folks out of is this idea of locking their money up. They don't want to lock their money up.
Right.
And it's shifting that mindset from locking it up to locking in their financial certainty, right? If we can get that shift, that, like, when you put it in real estate, you don't want it to be highly liquid. I mean, it would be nice if it was, right? You don't necessarily want it to be liquid. The point is I don't look, when I downshift into real estate, I'm acquiring these assets to hold long-term, to lock in my wealth. So again, it just comes back to education, and who better to do that than some of the top real estate investors in the country. That's what we're trying to create with the Whale Club, so that we can, educate these crypto cowboys, as I call it, and show them how to lock in this wealth.
Yeah, it's tremendous. And, you talk about them not liking locking the money up, right? Which I totally get. A lot of people don't. And that's why a lot of people don't get into real estate, because it is very illiquid, right? It takes time, 30, 60, 90, 120 days to market your property, to sell your property. However, if you tokenize it, turn it into tokens, then if you want to sell it pretty quick, you could do that fairly quickly, right? You're not going to wait all that time. So you do make it much more liquid for people to get into real estate and out of real estate. And I think that just brings more people into real estate, right? That brings more people into the space to get some of the tax benefits. Now, as soon as they exit, they lose those tax benefits. So it's kind of a double-edged sword with them. They're going to have to deal with that. But be curious to see what goes on with regulations there. But, getting the crypto people into real estate and getting real estate in people into crypto, that's our job the next 5 years or so, to keep educating these people, keep bringing them into the space, show them the benefits of each, because there's tremendous benefits of each. And we're fortunate enough, Paul, that we're going to benefit both in a real estate side and the crypto side much more than other people will. So just look at it from that perspective.
That's why if you're in real estate right now and you're not paying attention to blockchain, the diffusion curve is what it is, right? So I know there's probably only 20% of real estate investors out there who are going to see this early enough.
Yes.
I'm not trying to save the other 80%. Right? They can, these are the folks who bought, iPhones in 2020. It's like they've been using it forever, and they had you get it. But the point is, it's like, we're not here to save everybody. You can't. Trying to do that is fighting against the natural diffusion of technology, and I'm not going to do that. So if you're in real estate and you want to, this is the next internet.
Mhm.
This is the next internet. I can't say that more plainly. Take that to the bank. That is going to be the case over the next 5 to 10 years. It's just a matter of time. It's a matter of regulation and safety and things like this. There's a lot of factors at play, but it's safe to say that if you're start your journey of educating yourself now, right? It's not acceptable in my mind for someone in real estate to say like, I don't know anything about blockchain. It's like, well, start paying attention. Right?
Mhm.
Start paying attention. Otherwise, you're gonna miss this boat.
Totally. So I always go back to IBM. IBM is one of the oldest companies in the United States, right? They've been around for a very long time, I think since the 40s. And of course, they were big PC makers back in the 80s and 90s and before that even too. And what's interesting is kind of, as IBM went, the country went, they used to say that with General Motors, right? As General Motors went, the United States went, but IBM was always one of the big drivers out there. And IBM went from a computer company to a 100% blockchain company right now. And that's all they are doing. So when a company puts all their eggs in one basket and realizes what blockchain is and where it is headed, I think we all need to pay attention as investors out there. We all need to pay attention to that. And there's other companies out there to follow as well. And Ethereum is just what they're doing now with the merge, and what they're creating is huge. And they still got the best developers out there. It's just, we all got to pay attention. And
what a perfect segue into what I feel is the last of the 4 main applications, which is data. IBM is a data company. Like, if you're in data right now, take IBM as a perfect case in point.
Mhm.
There's a reason why they've shifted their entire business strategy to blockchain focused, because they see it.
Mhm.
They know what's coming. I'm talking about the skip tracers out there. I'm talking about just any data provider at all. Right? There's a reason I had a long conversation with Stephanie Betters at Left Main, and why Jason Lewis with Investor Machine is a part of the Whale Club. And we're trying to seek out these data leaders, because they're probably going to be the ones that feel it first, right? Because there's going to be some folks that do move to blockchain quicker, and then all of a sudden it's going to be this race for everyone to transition their business into double entry into a single entry, right? Which is what blockchain really does. It brings it all into a single source.
Yes. Yeah, it's tremendous. It's exciting times, Paul. Super excited. So the whole data thing is obviously going to be one of the big pieces here. It's going to continue to be. And if you think about what we do now, when we're just searching on the web right now, if we search for Nike shoes, a particular kind of Nike shoes that we like, if we just did a search, all of a sudden, all these ads are popping up for you right there. And that's them just collecting data and doing that. That's going to continue to escalate on such a level and reduce all these companies, these large companies, marketing costs, because now they're going to be going after red hot leads. They're not going to be just blank marketing to people now. If you think about like when we direct mail in real estate, when we're sending direct mail to a probate list or to whatever list, right? We're throwing generic ones out there. What if you knew the people who were very motivated, right? If you knew that, you would cut out 90% of the rest and just hammer those motivated people first, then secondarily direct others, right? So this is all data, and this is what's being done. Web3 is going to be a big part of that, obviously, as well as we transition there. But data is everything.
It's in real time too. I mean, think about how many times do I pull a list and it's like, they already sold their house or something, right? It's like two months old or something like that.
Data.
That's what it is. It's because there's multiple entry points for this data, and it gets aggregated into one place eventually, but it's outdated at that point. That's what blockchain solves, is it's all a single source in one place, real-time data.
Yeah, it's instantaneous. You're getting everything quickly and right away. You think about data again, going into sports, right? I'm a big Philadelphia sports fan, right? Phillies go to the World Series. Super excited about that. Eagles, got my Eagles Hawaiian shirt. They're 6-0 right now, riding high. But when you look at the Phillies, especially as an organization, they decide to look at analytics, right? Analytics are big. And I actually use this when I coach travel baseball. We would track where the other team hit the ball, so we would know we were shift our players. Pitching, right? So we knew where certain players like to hit the ball, whether it's inside corner, outside, up or down. And we would tell our pitchers where to locate that ball, keep away from their hit zones, right? This is all data. Data is everything. And that's blockchain technology. It's data storage, it's data instantaneously. So I'm
That
super.
is not as sexy, so it's like, that's why it's number 4.
That's
But
right.
it probably should be number 1,
It
right?
should be number 1. Yeah.
That is all blockchain is.
Yep, it is. It is. It's super exciting. And I appreciate your time, Paul. It's been super fun talking with you about cryptos, real estate, and all kinds of other little things we hit into there. But excited about the tokenization out of it. You have that now. You have the Whale Club. Let's talk a little bit about that. Ways for people to contact you, for people who are interested in potentially joining the Whale Club. How can they reach out to you for that?
So we are not taking any new applicants right now.
Nice.
We are focusing on getting as much free content as possible. So my first step, if you want to learn more about what it is, what we're doing, I've made 4 master classes on how to earn passive income, how to do it with the principles and the frameworks that we use, how to approach this problem, how to do it safely and remove as much risk. So I've got those 4 master classes up on our website, blockchainwhales.com. So blockchainwhales.com, if you go there, right there on the homepage, you'll see these 4 master classes. Watch that free content right there. Then you'll want to subscribe to the podcast that Steve Trang and I are doing each week. It's called Certainty Talks. We essentially are using that to, like, blockchain is no different than any other asset class. You have to have frameworks and principles to approach it. Otherwise, you'll get wrecked. That's the same thing in anything, right? So we're talking about how we approach investing, how we approach business, how we approach life. And oh, by the way, we apply all that to crypto investing. So if you want to know how we're thinking about it, listen to that podcast. And then if you're so inclined and you're like, dang, this is cool stuff, I want to learn more, we're giving all of it away for free, but you have to join our community. So for those that are in real estate, we're using a platform called Discord. It's just more highly utilized in the blockchain world. It's your first step into the blockchain world, right? So you can come into our community, into the Whale Club, absolutely for free. You just got to go to blockchainwhales.com, click on that, join the Discord right there. We've got tons of other master classes that I'm putting out every single week. I've got how-to videos on, like, literally how to move money around, how to buy coins, how to do all this stuff. It's all right there, absolutely for free. We want more real estate investors to learn about this stuff. So we're not taking anybody in until we've done a lot of free content to just educate the entire market. So that's where we're at right now. Go to blockchainwhales.com, watch those master classes, subscribe to those podcasts that we're doing every week. And then if you are so inclined, you can join our community absolutely for free. There's a ton of additional videos and resources there. So yeah, we'd love to see you inside the Discord.
Great stuff, man. You can't be afraid. That's tremendous. And yeah, everybody take advantage of it out there. If you don't know real estate and or cryptos, but are very interested in both, this is the world to be in, right? This Discord channel is tremendous. Make sure you get in there, learn. It takes a while to learn this stuff, right? There is a learning curve. This is tech, right? Technology is not, it's like learning a new language. And we talk about this all the time, Paul. We speak to people. It's literally like we're speaking a different language to people. And it takes a while to get the learning curve down, right? On crypto. So definitely go into the Discord channel, learn it, understand it. You can interact with people in there. You can ask questions. So it's great resource. Jump in there, do it. Paul, I really appreciate your time, my friend. It's great catching up with you. I look forward to catching up with you again in person here, hopefully fairly soon. I know you're going to be joining yourself in Hawaii in a few weeks, which is great. Have a great trip there for sure. Anything you want to say in closing at all?
No, I'm sure we would have had this conversation if the cameras were off. So I just, we can call this a podcast. It's more just a conversation between 2 crypto enthusiasts. So I don't know. I appreciate you having me on, and thanks for the conversation.
You got it. Thanks again, Paul. Take care. Have a good one.
Yeah.